What's going on, everyone? My name is Nicholas Merten here from DataDash, and I hope you guys are having a fantastic day wherever you are, because in today's video, I'm going to be bringing you guys some new, deep insights when it comes to the price action of Bitcoin, altcoins, and the stock market. Because today, I'm going to be introducing you to a trader I've been looking forward to bringing onto the channel for a long period of time, and that is Paul Sampson. He's going to be one of the new traders on our team here at DataDash, and he's going to be helping to bring a lot of insightful analysis on crypto markets using his time-tested strategy that he's utilized and built up over the last couple of years. Now, Paul is no new trader. He's been around as long as I have in crypto, since back in 2017. And outside of that, he's also worked with verified investing and a whole range of other great communities in the crypto space. So I'm really excited to dive into this conversation where we're going to be talking about how to find really solid altcoin picks in the market, his Bitcoin analysis, as well as his viewpoint on the broader macro picture and understanding where we are in the broader cycles and bull market. So without further ado, let's go ahead and kick things off. All right, everyone. So Paul is here today. Paul, thank you so much, man, for making the time. I'm really excited to kind of dive into the charts, let people get to know a little bit about yourself as well, and also talk a little bit about kind of the big picture view right now, what's going on Bitcoin and altcoins. We had a huge pullback over the last couple of days in altcoins. Bitcoin as well, kind of teetering on some of the big moving averages. And I know that you've been in the space for a long time. You're also kind of someone who's been in crypto since 2017. So I'm also interested to step back into the macro picture and try to understand where we are. So thank you, man, for making the time. It's a pleasure as always.
Yeah, absolutely. And, thank you, Nick, for having me. Like I've told you before, it's, huge honor and very humbled to be sharing the screen with you. Like I said, I've watched you build this empire of a channel over basically since 2017. You were probably one of the first channels I came across. So kudos to, what you've built here. And yeah, just a little about me, before we kind of jump into
Yeah,
everything
sure.
too, is like you said, I've been in the crypto markets since 2017. I like to say my gateway drug, so to speak, was Litecoin, actually. In 2017, January, was my first purchase into the crypto verse, I guess you could say. Only reason being, it was the only thing you could get, one of three on Coinbase at the time, right? So it was a very different world than now, very minimal on ramps. It was Bitcoin, Litecoin, and Ethereum, and much like many people that enter the space brand new, I went for the cheapest one because I could get the most, coins, quote unquote, for my dollar. Yeah, I ended up riding the 2017 wave all the way, till the end, with Litecoin as my main bet, like only really the only thing I got involved with. And towards the end of the market, we had basically is when I decided to start making some moves. And back then you had only Binance and a few other options to kind of go through. You were only trading against the Bitcoin pair. You weren't even trading in, US dollars quite yet. Made a lot of
Yeah.
mistakes. It's just made all the mistakes really, over the years, and ended up actually, like, I would say 100xing my initial investment, and then 2 or 3xing it from there, and then losing it all essentially. So that made me heavily addicted to, diving into like the charts and understanding the market dynamics a bit more, because at the time there was no fundamental reason, at least at the moment. Like everything seemed like it was full steam ahead. All the things about that market seemed like it was, like, it shouldn't have dropped the way it did. And that's just what made me so hungry to, start getting into the technicals. So yeah, ever since then I've just self-taught for a good bit, worked with a bunch of other people in the space, other traders. A couple partners have come and gone. And yeah, my trading style is a little bit of a mixture. I've kind of done it all, like from just traditional trend lines and patterns to now kind of focusing a little bit more on high time frame volume ranges, essentially. So high time frame ranges based on volume, high time frame averages of price, harmonic patterns, which are sequences of Fibonacci, all kind of merged together. And then, of course, still taking the psychology and the fundamentals of the market and just molding it together and trying to come out on the right side.
Yeah, man, it's a lot. It's incredible, as you mentioned, since 2017, the world has changed in a big way, especially crypto as an industry. And I'm interested to kind of dive in and talk about some of your kind of philosophy around how you read the charts, from what we've talked about and stuff over the last couple of days and stuff. I'm really excited around some of the ways that you approach markets. I see some overlap, but I also see a lot of really interesting, fresh perspectives. So perhaps maybe we can start by talking a little bit about Bitcoin, because I know that Bitcoin has been kind of teetering on a lot of the moving averages. The 21-day It's been kind of inconsistent over the last couple of weeks, really the last few months since back in kind of late November. And I know that there's a big focus of yours as well on what you would define as pivot lines, or essentially these kind of quarterly or annual averages. So maybe we can chat a little bit about that. I would love to kind of get some, kind of pick your brain on that and see what your thoughts are on it.
One thing for me is I try to keep my chart as clean as possible, for most things that it's like relevant at the time. So as you can see here, I've got literally just 2 lines on the chart, which you kind of just brought up too. And when I'm looking at, Bitcoin and just really any of the assets here, obviously there's multiple ways we can approach it. The most recent strategy, that I've utilized over the last few years is range data, right? So, which incorporates certain things along with also these high time frame averages, which you do note here. They're known as pivots. And this is the high time frame average of a certain session. So in that sense, we're just looking at whatever time frame. So for this quarterly pivot, this is the average of price from last quarter, so Q4 of 2024. Which is very likely. These hit at like a 70% hit rate in the following session. So we can take this all the way down to daily pivots, weekly pivots, quarterly, 6-month, yearly, bi-yearly, you name it. And in the next time frame generally is when you kind of come to that. So there's no guarantee it hits. There's no guarantee when in that time frame. So you kind of have to, for me, I base it around a big piece of my strategy, something I'm highly aware of, keeps me grounded at times too when we're coming up near highs. And a really good example of one of these is actually XRP, which I can show you little later today. But yeah, overall, when approaching Bitcoin, like I said, we have some high time frame averages, one of which just comes in right below all the lows right now. And a lot of times the price will return to that region, just like a mean reversion, similar to an EMA, an SMA. Unlike the other two, though, those are dynamic and they're constantly moving. The one good and bad thing about these are that once they're set, they're just that they are what they are. That's the average. That's not going to change, and it's going to sit here. It's not going to end up scooting up like you would see like an EMA or an SMA that sometimes we can kind of range around. We kind of meet it and then we kind of go from there. So for me, this is a really big key level that I am anticipating we hit in Q1 of this year. So that's one thing I've been looking for here. A really good example of this, I just kind of put this on here, is back, I think it was actually last year. It was. So January of last year, we had that big run up. You had the 50K ETF news, right? And then all we did right here was, if you were trading back at the time, obviously, we'll just go ahead and cut it. Right? We were looking at the price action, well away from the average of price down at 38,000. We were sitting at 50. Price slowly made its way down to that quarterly average, right? And then you can see that we continued on from there. So it's not as cut and dry as like that's like the only thing and the only reason that I look for anything, but that is a big key level there that I will be constantly bringing up. And a lot of times I look at the market, at an approach from a new week, a new day, monthly. Every week we have these same averages of price as well. If we just zoomed in here, I'll go ahead and show you where this week's was, right? So we know we took the tumble earlier on yesterday. And then we had actually a weekly pivot, which is right where we're trading at right now. So price action ended up coming down, and then we pushed back up. What do we do? We're just pushing right back up to the average of price. So in a lot of my trading strategy, it's very much a big piece of it, which is going to be something that we kind of touch on. The quarterly one that we're sitting on right here is very important to me at the moment, because just when looking at Bitcoin here and trying to decide if we're going to see another move back up to the upside or a continuation leg up, I think that this is kind of the line in the sand. And I'll bring that up in the sense of just the same way I viewed, this overall move all the way to the upside. So just keeping it really simple and just kind of building, a little bit of confluence here. On this entire impulse move to the upside here, we've seen some pretty shallow retracements on Bitcoin, which usually we've seen, 50% pullbacks, 40%. I mean, a lot of these have been, I'd say 20%, 25% here. I'm pretty sure that was a 25%er. This was probably 15, 25%, 18-ish, give or take. This was their biggest one at 34%. Mm-hmm. Many would, probably attest that to the ETFs and a little bit more of the institutional driven value of the market, maybe not seeing such major pullbacks at this point. So when we get these strong moves to the upside, what you can start to look for are retracement areas for pullbacks, known as the Fibonacci retracement. So this is another major tool that you'll see me use quite often. This is a really indicative thing to see where the price action may return to, as well as project to. So for example, I'm just going to actually pull off of this region of price right here. And, we had this pullback down to the, from $72,000 to $48,000. And if you were to look at this in the sense of where we could see a retracement to the upside, you pull a Fibonacci retracement tool, which you can find. I have it in my toolbar up here, but it's actually over here to the left side, top area right there. So the reason that this quarterly pivot is so important to me at the moment, one is it's right below the lows. We see Bitcoin, really any asset, time and time again, come down, sweep our lows, sweep our highs, liquidity grabs, is what most people would look to it as. And that's realistically exactly what it is, right? The market is coming in and, finding liquidation points, stop losses, and it's going to fuel the moves for the next, move up, move down, or even the breakdown or up. And what I'm, looking for here is that when you have a really strong impulse move to the upside, a lot of traders, including myself, and one big tool you'll see me even use is the Fibonacci retracement tool. All right. So, and what this is that you can actually take a section of price, any price on the, on the chart, and you'll see time and time again that will return to these levels. And basically what I've done here is I've taken from the 2022 low at 16K, and I ran this up to our $72,000 area here. And I've said that this is basically our starting point. So even though we finished, this impulse move up here, if I was to see a retracement, which means I'm going to retrace, X amount of this position here. And if this was 0 and this was 100%, bringing us all the way back down to the low, you'd have 25% here, 50%, 75%, so on. In this region, a couple of the key areas I look to are the 0.382, as well as the gold pocket, which you'll hear a lot of, people look to the gold pocket. That is a 61 to 65% retracement of said area on the chart. Very key area you'd like to see that, when price comes back to that area, very likely that you're going to get a bounce from there. You see support from that region, or vice versa. You can actually look at this from reverse, and we can actually be, coming back to that as a retracement to the upside. But in this situation, I'm looking for, when we're looking at this in the sense, you can note that what did we actually bounce off of? Well, instead of coming down to the gold pocket, which, like I said, many were probably looking for at that point, which would have took us back to 35,000 at this time. You see that we got a bounce off of the macro 382. And I bring that up because after every major quick impulse, you get a shallow pullback. And generally, you look to the 382 for continuation, right? So whether it's to the upside or to the downside. In this case, it would be up. So we have this really nice move here. We got a pull back to the macro 382, and we got our continuation. Now, if I was to pull these all from this entire move up here, this was a 382 pullback and then continuation. This was a 382 pullback, then continuation. This was a 382 pullback and then continuation. As I pointed out, that these were only about 20% pullback, so that would make sense that it wasn't a deep retracement. Then we've got the overall macro 382 that we pulled back to here. And while can we come down, any further in Bitcoin, in the coming months? It's definitely possible. But for me, I think that there's a big reason that, 86,000, which is this quarter's high time frame average of price from last quarter. So likely to be met this quarter, for one. For two, it's just below all the lows, which at this point, there's a ton of liquidity built up there, meaning that anyone and everyone in this market that's, entered at this area here, which oddly enough, there's so many entering at every moment. Most of them are not entering at the lows. Most are not entering at the highs. They're entering at the middle when they feel that, their confirmations have been met, stop losses above both, what have you. So we got all the lows here. You got a high time frame average. And if I was to pull a Fibonacci retracement now and take the retracement of this low to this high and see where that 382 is going to come in at, look at how we line up with that quarterly pivot right there at the 382. So it's something I've been kind of toying with. Probably a few weeks ago, I would have actually looked for a bigger retracement here. And even when we took this high right here, it was actually something I was targeting, was all the way back down to maybe the gold pocket region at 70K, maybe even a little lower. But the ETH versus BTC chart did something over the weekend that kind of skewed my opinions now. And I'm really going to be focused on this $86,000 because for many reasons, I do believe that this could be, if we come down to it, maybe we don't, maybe this just breaks higher. But if we're going to see a leg up at this point, I think it would be a really great area to see a retrace to, a hold, and then we get that continuation to the next move up to potentially 120 and above on Bitcoin.
Very interesting. To that point, Paul, and I guess this kind of leads us maybe into talking about altcoins a bit. It seems like with the drop that we saw in others' market cap as an index, the just broad bloodbath we saw in altcoins, most sectors retracing like 33%, giving up a third of their market cap in like a day. I saw that in meme coins. I saw it in a lot of like layer 2 protocols. I saw it in real world assets, AI agents, all this stuff that people are really excited about trading. Just a
Right.
huge wipeout in valuation. But you also saw it in large cap plays. ETH dropped a massive amount to new fresh lows, and basically in total has pulled back about 75% from Bitcoin back in 2021. So it's just been in a complete downturn for the past couple of years. I'm curious, like, do you feel like we are entering into this period of time where altcoins are losing their stake in the market, and that it's going to be really the institutional wave of capital that starts to isolate into Bitcoin and maybe a few key plays in the market?
So, honestly, I think that this weekend actually set us up for quite an altcoin season.
Oh,
So a
okay.
little bit of an opposite take than that, and
Interesting.
I don't disagree with that, and I do think that that has led Bitcoin to see the levels that we're at, and maybe that is what takes place. But at the moment, I do see a world where actually, traders in our in our world, I guess, look at it as like a Bitcoin season and an altcoin season.
Hmm.
And I do think that we're coming into the transition, and potentially over the weekend, I think we just exchange hands in a sense. And I'll kind of showcase that here in a second on the BTC versus ETH chart. But I did want to show that I'll just kind of clear this up a little bit. Just another like good example here, right? So for looking at the gold pocket retracement zone, so looking at the total two altcoin market, this was actually something I was viewing recently where we were just trading up in this region just last week. I mean, this was Monday, the 27th, right, of January, and a retracement back to the gold pocket, which I'm just pulling a Fibonacci once again retracement zone from the low to high, and then if this was our area to look for a retracement zone, we just pulled back right into that key level, right?
Yeah.
So nice 61 to 65% retracement into that area. Got a really good reaction from it. So at the moment, I would have to say you have to anticipate that, as long as this is held, we probably get a little bit of a, pushback higher. We've got 1.32 trillion I've got marked out here as kind of a big line in the sand. So maybe this, could just end up being like a dead cat bounce type of situation. But yeah, I think that, it's definitely a time where, at least for me, I'm looking at altcoins in a big way. That where maybe the next few months it is actually an area where we see some pretty decent moves again on them. And one of the biggest things is that, like I said, ETH versus BTC. We'll take a look at that, and then also just the sentiment alone as well. When I look at the ETH versus BTC pair, I think that that's one of the biggest viewpoints that people will look to for a gauge on the altcoin seasonality, right? So like when
Hmm.
ETH outperforms Bitcoin, that's generally when we see the altcoins outperform as well. Realistically, I think the total markets are probably the total charts are probably the actual like viewpoint of that, because this could just mean Ethereum only just starts taking off versus Bitcoin, and everything else could
Yeah.
theoretically not move. But I find that hard to believe, especially with how the market just took that big hit. This was an area that for a year and a half I've kind of been looking for this retracement too, that could set up a huge reversal. So another big thing that I tend to look for in the charts are these patterns that I think most people don't really look for. They take a little bit more time and effort to be aware of and understand. They have certain rules to them, certain target points as well, and they're known as harmonic patterns. They're created by Scott Carney, which is the harmonic trader, and essentially these are just a sequence of those same Fibonacci retracements. So if I'm looking at this point to this point, we're pulling back to the 0.5 fib, and then you get a bounce, and so on and so forth. And I'll cover these a little bit more in detail probably down the road, maybe even have some dedicated videos for them. But generally, I like to just kind of overlook on how I'm approaching them. I utilize it with a little bit of confluence to other key regions, and then I'll look for a potential reversal. In this case, this is actually a very bullish setup that has been in the making for 6 years. So if we know anything out there, if we're looking at equivalent of head and shoulders or a falling wedge or, bull flags or anything of that nature, right? The higher the time frame, generally, the
The
longer the
bigger the
breakout is going
breakout.
to, take place for.
Yeah.
Now, I don't think that this is going to be anything overnight. And realistically, this was my completion zone. And while, this level here is basically an 886. So when you're looking at the gold pocket, it's the 618. A lot of people look to like 786 retracements. This is an 886 retracement. So this is almost 100%, full on, rebuttal here. But this does complete this region. We got a beautiful reaction right from the low. It was right in this box area here. And for me, I was just looking for this around this time frame, which, take that for what it's worth. But for me, I am looking to see if we get this, decent reversal out of here, start reclaiming some ground for realistically, it's not much from where we are now, maybe a 15% increase here on the ETH versus BTC pair. I do anticipate several, this is a 6-year pattern here. I'd say we probably have several months where we probably, rally back up, and we have specific targets of this pattern. One is the 382, right? And it's also your B point. So basically just a revisit, if you were looking at this in the sense of, just simple support and resistance, where would your number one target be? Just basically retest that low right there. So there's a lot of confluence like stacked up in that region. And then also the gold pocket, and there's a couple other areas up here. So for me, I actually am looking at the altcoin market as in the coming months here, probably within the next 90 to 120 days, to actually see a substantial, maybe a little reversal here. So
That's awesome. No, this is really insightful, Paul, because to be honest, I think you see a lot of the sentiment shifting where a lot of people have gone quiet on altcoins over the past few weeks. I think back probably in November when we started to see a pretty solid flat line in the trend throughout November, December, you had a lot of people getting excited about it. But I always find it's during these kind of max pain scenarios where altcoin dominance is dipping sharply. Essentially what we had back past couple days and stuff in regards to price. You had altcoins just massively flushing out, all those longs getting liquidated, stops getting hunted, providing the perfect ample situation where you can get this major spring up. And it's usually always, as you mentioned, like from a price perspective, if I think back to January of 2018 when Bitcoin had topped out at 20,000, or for example, in the earlier part of 2020, or the later part of 2020 going into 2021, you see really this major vertical spring up in altcoin dominance, this vertical spring up in altcoin pairs. And from there, a lot of people usually a bit shocked by it. But that moment when a lot of people get knocked out of their positions, they're capitulating, they either get liquidated or they're just getting out of their positions at that time. That is exactly when the spring up happens. And it happens within a very short window of time, usually when people least expect it.
One thing as well, and look, I wanted to cover the Bitcoin dominance, like kind of leading up into that. But when you see that quick move, like we saw over the weekend, especially, and you see, things like even Ethereum drop 40% from Friday to Monday, we saw a 40% drop. And vice versa, when you see a huge move to the upside, it gets people in their emotions really quickly, right? Especially if you're not prepared for something like that, if you can't make sense of it, and especially if there's a news catalyst wrapped around it that you feel a little bit unclear of. I think that everybody just looks further, for the way that the direction of the market is going. So if you see this huge drop, you get a little bounce, I think that everybody gets really worried, and then it's just like anticipating lower only. When in reality, like you said, a lot of times those are probably the best opportunities that, you got to kind of be patient for. You don't know if you're necessarily ever going to get them, but those days are the ones where there's blood in the streets essentially. And a lot of times they're reversed, not always. Of course, there's times when, that could be the beginning of a huge decline. But to me, I think that there's signs across the board here that point to the altcoin market as a whole probably seeing some more upside. And the dominance chart is kind of where I'll finish that little piece off with. So for the last couple of years as well, that ETH versus BTC harmonic pattern, I was just kind of showcasing. The low of that came in, and essentially that's a chart where you want to see ETH versus BTC going up. That means altcoins going up. You want to see this chart, on the other hand, going down for the altcoins to go up, meaning this is Bitcoin's dominance on the market. And when it starts to decline, that means that altcoins are going to outperform as a whole, not just Ethereum. And we've just seen this staircase all the way to the upside here. And for me, I've been looking at this in overall as a basically a huge range, right? And you'll see these volume profiles over here, which I'll cover a lot of these as well as in the future. But this is just a fixed range volume profile tool. You can come down 3 or 4 sections over here on the side, and it looks like a P with an I right next to it. And you can pull basically any data points on the chart, and it's going to give you all the volume that took place in that region. And for me, one of the biggest areas of this chart is the point of control. So you can see where all the major volume node came in here. This is when the most amount of transactions took place. Obviously, we don't trade Bitcoin dominance, so this is not something that's a tradable asset, but this is just where the most time was spent, essentially. So it's a big key region down here. More so, I'm looking at these highs right here for a couple of reasons. As far as any kind of a pullback would go if we got one. But the bigger picture here is that we came into a trend-based gold pocket. So once again, key region that I was been looking for many, many years. I was prepared for it personally, at least. There was a couple of volume targets up in this area. And so far, the reaction from this, when you're looking at, when you see a
reversal on the candle.
Yeah,
that's a huge sign. Yeah.
This is what you want to see, when you come up to some highs or some lows like that. And you see the same, thing from the ETH versus BTC chart just at the low. So you got a potential reversal, in my opinion, on ETH versus BTC. You got a potential reversal. And I'm talking major multi-month reversal, not just, this was a December pullback right here. Where, mind you, in that by and large, this was an altcoin season. I know that everybody likes to think of an altcoin season as 2021 blow off top, 2017 blow off top scenarios. We have multiple altcoin seasons at a time. Right here, we saw XRP go 6x, HBAR go 7x. Pretty much everything went 150%. In that time frame in December or November to December, just a couple months back. We front ran this region. So for me, I was looking to see if we would come back up. And just like any other chart, you've got, you take the highs. Like if this was a tradable asset, you look at it like a liquidity sweep. And so far, we've done just that. You've come up, you've ran it right into key levels, and you close back below. For me, this is, indicative of a really, really big high time frame reversal on the dominance chart, which is, in turn, potentially going to lead to altcoins moving up. So just how I start stacking up all the confluences across multiple different, assets.
I have to be honest, Paul. I keep an eye on Bitcoin dominance, but I hadn't watched it in the last few days. And seeing the similarity in that fade in Bitcoin dominance, it's so indicative of prior altcoin cycles. And not to mention, as you said, you have that alignment with the golden pocket. It's had a nice expansion. It's still a relative lower high from the prior Bitcoin dominances of the past. That looks like the stars have aligned, man. That's very interesting. I was thinking, to be honest, this is really insightful. And so, you believe, as you were mentioning, you saw a lot of those kind of, I would say, kind of mid-cap plays, like, XRP, XLM. I think ideally with the better regulatory environment, more institutionalization of crypto, you had that kind of short-term altcoin cycle where a lot of those plays, HBAR as well, as you mentioned, had a really solid run-up, making multiples on their original investment. You believe now that we could see something even at a bigger scale than that over the next couple months, probably that trickles down into a wider pool of plays, more narratives, and maybe even higher multiple potential as well.
Yeah, absolutely. And, and I think that just everything aligns well with it. And one big piece of that, is going to have to be that Bitcoin will need to continue up as well. Right. So that's also the last little piece where, up until this last shift, because reason being is that I did anticipate, personally, even a sizable drop in Bitcoin with that last move to the upside. Let's pull this up real quick, since I've already unleashed the harmonic plague in here. I try not to get too crazy with that, but it's interesting stuff. This last move up right here on Bitcoin, when we came right into it on inauguration day, and you just, you could look anywhere around you and it was euphoric, right? Yeah. We had all the news coming in. We had a new, new, not regulations, but new bills being signed that, favored crypto, all the things that, would be a sign if at the time that we were going to head higher. And very similar in the same sense of that, bullish reversal pattern I pointed out on ETH BTC. We had a bearish reversal pattern print up here at the 110 spot, right? So this is actually a bearish level that I was looking for, where once again, in the same sense where you're just constantly coming through, you take the lows, You come back through, you take the highs. These are a sequence of Fibonacci. I'll get into in the future here. But these patterns have very specific targets. One of which being, now I'm looking at a Fibonacci retracement to the downside. So you're talking about the 50% retracement is target number one. Target number two is the 886. There's no gold pocket support on these patterns, so they usually blow right through it once they lose the 0.5, which we did exactly that. And you can see that's exactly where we bounced off of at the moment, that 91.5. This also gives a little bit more confluence to my 86K area, because the final target of this, pattern that's I still think is pretty valid at this point. Granted, I have to acknowledge that two targets have been met, so it's not necessarily overly weighing in my opinion. But the final target of this is the 113 Fibonacci, and it sits right there as well, which is, as you remember, that macro 382 potential area. So this is a really big zone if we come to it at that 86K. Yeah, so. And when I brought this up for was that at the time, this could have really led to a bigger pullback. I was anticipating that the altcoins would drop down to that completion zone, which was, sizable, which meant that we probably would see a 40 or 50% pullback in altcoins. Usually we get a decent pullback in Bitcoin too. I wasn't expecting only 15%, give or take, Bitcoin pullback. That would, a sneeze on Bitcoin like that would give the altcoins
knock
the flu.
altcoins that much. Yeah.
Yeah. So, it was an interesting ploy there. But I do think that the environment is here where, assuming that Bitcoin either takes off from here or catches a decent, low around this 86 and 80K region. I think that the altcoins are, in position for it. I think that pullback was very indicative. I think that dominance aligns with it. To me, I do see a world where the next few months here, probably, maybe the rest of this year, could be a very altcoin favored, rally.
Yeah, and just curious, Paul, maybe like a quick run through. I know we'll obviously have lots of area for you to talk about this in future episodes, but do you have any altcoin charts that are looking favorable to you right now? Like on your radar, maybe you can give a little hint or sneak peek into some that you're watching.
Yeah, I would say, there's multiple. I ended up picking up quite a few the other day. Things like Ondo, Sui, things that kind of came into some really big targets that I'd been looking for.
Very cool, man. No, I think if you're seeing like these patterns and stuff, as you mentioned, you already have them all mapped out. I think that this is the chart I want to kind of go over with people again, talking about these pivot lines.
Yeah,
Incredible.
this
I
this
mean,
is just a beautiful view. XRP is by and large one of the largest community driven, not by the price, but by the idea of it, I guess. Right. This is probably one of the XRP and Doge, I think, are the two. I call them market exciters, because when the two of them start moving, everybody's in, right? Everybody's paying attention again. I don't know why Doge, but XRP at least I get. I felt like Doge would probably lose its luster after some point, but it's not it's very susceptible to technical analysis as well, and key regions and pullbacks. I think that everybody gets really under the impression that especially when something's moving up, right? We had a huge range, broke out, consolidated, moved up again. For me, I had a very specific target area that I was looking for up at 317, which was actually, a piece of a local harmonic pattern. So bearish once again. On top of it, I was looking at Bitcoin in the sense of potentially getting a pullback. All the other things kind of looked at it, right? And for me, we had generated new averages of price. So now just looking at those, the quarterly pivot that I've been discussing on Bitcoin in the beginning at 86K, which is likely to get met this quarter. We have a quarterly, a 6 month, and a yearly. So the average of XRP's price for 3 months, 6 months, and 12 months all stacked at $1.79. So think of it once again: EMA, SMA, 200-day. Just you see the mean reversions to those all the time.
yeah.
But they're dynamic. So they're moving and adjusting. These don't. So I had the conviction at the time was did I know we were going to see this? Not necessarily. I didn't know it, but I had to position myself accordingly. So I ended up closing positions up in this region. Mind you, I've been in XRP multiple years, 50 cents, 40 cents, 60 cents, accumulation zone as of recent. Scaled out on the way up, didn't sell everything at the exact high, but this was my last little offload at 317, which was my little box area here. And I was looking for awesome. A pullback to 180, which is going to be my new buy zone. I had the, preset buys and everything like that. And at the time, this was a 50% correction that most, 46, that most probably, not even most, people would argue that that would have not been a thing, you know, and lo and
Yeah.
behold, you get it. Obviously things align together, you get tariff situations and all things that unfold together, but um, price return to that average of price, you know, to the T. So um, we see this time and time again, every day, every week, every month, every quarter, especially when you see these really quick drops like that. Which generally I think we could look to a lot of the, you know, even the EMAs and SMAs as well. A lot of times it's, you know, price returning to those levels. A lot of the most times they're returning to these areas too. So this was a really just good example of that and how I, you know, implement this into my daily strategy for not only just, you know, swing trades and day trades, but more so the macro idea here. And I do think that XRP is loading up for a, you know, next sizable move, you know, assuming that altcoin season does take place and, you know, we can come up and we can reclaim this 353. You know, one target area I'm looking for is up to this 489, and then potentially is, you know, 681 would be the next leg. So
Hmm.
uh, once again, looking at it, you know, as it comes, taking data, willing to adjust. You know, that's one of my bigger things too. Is I'm looking at new data every single day, every week, every month. For example, that level was not there, you know, 2 weeks ago, or a month ago, I suppose. It just generated from last quarter, last 6 months, last year. So um, as things progress, and if we start to lose key regions and all this starts to look like it's floundering, then, you know, I'm always willing to you know, adjust my bias as need be.
No, but I think, to be honest, like Paul, this is a great example how you decided to play XRP, where you're using your process. I think it's awesome, man. I mean, it's interesting because every trader has their own process to approaching markets, but this is one that's rooted in a lot of the systems that I would say probably more advanced traders utilize. And it can take some time to understand some of these things. I mean, I give kudos to you in the sense that I hadn't learned about these average like pivot lines that take in quarterly averages, annualized 6 month. I think that this is really fascinating, even going beyond moving averages. But using Fibonacci retracements, that's a time tested tool that can be
Yeah.
very valuable. And also as well, you know, keeping in mind again those golden pocket retracements, I think it's incredibly valuable. The one thing I wanted to talk about though, because I know we've been kind of focused on the microsphere. I mean, it is our specialty here, kind of focusing on crypto. I wanted to maybe chat with you a little bit, Paul, about like the big picture stuff, because just like myself, you're really interested in the macro. I know everything's looking really, you know, quite bullish in the scenario for crypto that we're discussing. Maybe a potential altcoin cycle, setting up a bigger one than what we saw back in December, if the cards really turn out right here. But the one thing I'm curious to hear about is what your time frame is and where we are in the bigger picture in regards to where assets going overall. Could we expect some kind of recession or pullback in the next year or two? You talk a lot about essentially the housing market cycle theory, and correct me if I've got the labeling wrong, but this is something that really interested me when you and I were chatting before. So maybe we could spend some time to dive into that.
Yeah, absolutely. So one of my, if not the most important analysis that I am constantly keeping at high level, you know, in my mind for my high time frame, you know, overview, just even for my personal life, you know, what I try to portray into my analysis on the markets as well, does come from the housing market cycle. So, you know, credit to Phil Anderson, who's a gentleman that created the book, I believe it's the Secret Life of Real Estate and Banking. Is kind of where I came across it years and years ago. Before that, one of the most, you know, interesting things that ever got me into trading, investing, and even looking into crypto at times. And at a point there, you know, I dealt with some other things. The Iraqi dinar was, you know, going to revalue, and I've just been interested in these things for a long time, and even since about 2012. And one of the first things I ever came across on YouTube, which in 2012 YouTube was like watching a VHS, but you know, this this guy had a napkin and he basically drew out this. And mind you, it was 2012, so we're sitting like right here, right? Well, you don't know this chart yet, but in general, 2011 is right here, and so on.
Right.
But it's 2012, and the guy says if you don't buy a home by 2016, you won't have another chance at the, you know, a great price until about 2035, 2030s.
Hmm.
And at the time, I was like, no way. Like, what does that mean? You know, houses are obviously just coming off the 2008 collapse. Like, you know, we're, you know, sitting at whatever, great prices, no issue, all the things. 2016 comes around, you know, and I'm kind of just paying attention. It's just something I've always kept in mind and what have you. And anyways, that first piece is a big piece that got me into this. I'll kind of come back to it, I suppose. But what this is the 18 to 20 year housing market cycle, which unlike the 4-year cycle in crypto, which I think that most people, including myself at times in the past, it's all we've known because that so far has been proven to some degree. But there's only 3 data points and, 3 data sets of that in the past.
Yeah.
And, for something that's getting so, big, evolving at this point, institutionalized, all the things, I've just found it. And also just looking at a sentiment, crypto is probably the number one sentiment based, and maybe online, maybe every asset class is sentiment based to some degree with people's biases and everything. But, one thing I always notice is that when everybody thinks one way, obviously we all know how that goes. And I can say with pretty big confidence that most people, especially if you're entering brand new to crypto, you run into your first couple, doing your own research, if it's a YouTube video, if it's anything, right? If it's actually looking into things, on your own, you're probably going to come across the 4-year cycle. And I know that that's where people definitely do come across. And that theory, is that this year we're going to see the top in the market and then another bear market and so on. And you repeat that cycle on and over and over. To me, I think that cycle gets busted this time around. I think it's already shown signs of that in many ways, one of which just, meeting a new all-time high before the halving. That was at some point like a huge, category or like a preliminary for the 4-year cycle. Anyways, but I've always looked at, trying to figure out what else could I be looking at this as? And in my eyes, I view it as it's been building the first 20-year cycle alongside the housing market, which the housing market, we have 300 years, of data points that we can look back to. Personally, I've, ran statistics on several 20-year iterations here. And the going thesis here is the same. And this is very interesting. So what I've drawn up here is that basically these are all the years, at these points in the chart. It's a 7 to 10 year rally to the upside. You get a black swan event right here. You get about a 2 to 4 year consolidation, which always ends, it's pretty uncertainty, always ends in high interest rates, high inflation. Everybody expects a recession. And then you get several years. I say several, it could be 4, it could be 5, it could be 3. You get a pretty decent little, really a melt up at the end of the day. To a blow off top scenario. Then you end up, restarting the cycle all over again. And overall, it's 18 to 20 years. Mind you, that's a huge window of time, and it could be, plus or minus a year, at certain points. And these 4 iterations I've got drawn up here is in the 50s. We had started this, last housing market cycle. You run up. You get the Cuban Missile Crisis right here, 2 to 4 years of consolidation, high interest rates, high inflation. Everybody expects a recession. Face melting rally in 1972. We restart this around 1975. We run it up to 80s, where we have the Gulf War at this time, 2 to 4 years consolidation, high interest rates, high inflation. Everybody expects a recession. We run it up to the 90s. These next 2 iterations are very familiar, I'm sure, to anybody our age or, older. At least. And 1993, we restarted this again. 7 to 10 years go by. 2001, we get 9/11. 2 to 3 years.
Collapse of the .com bubble as well.
Correct. Yeah. .com bubble exactly. High interest rates, high inflation. Everybody expected a recession. Run it up to 2000. It says 2007. Technically, if you looked at it, that's when like the top ish is starting to come in. So once again, a little window of time. 2008, we all know, was generally the last housing market collapse. So 2011, 2012-ish, we could say we restarted this once again. When was crypto born, right? At the end of this last one, we're born here for the first time. So far, we've got a few 4-year cycles, but I have, kind of had the idea here that crypto's putting in the first 20-year cycle alongside this housing market, right? And so far, once again, you've seen overall 7. And when I say housing market, that encompasses all markets, really. A stock market, everything is going up. It's not just the housing market by itself. It's just the leading indicator that I'm using in this sense. But in 2012, we got a 7 to 10 years run up. 2020, we're all familiar with what happened there. 2 to 4 years go by, and this was, this is now I'm living this, piece of my own analysis out of this point too, right? Where I'm looking at that guy who's like 2012. 2016 is the best time to buy a house. I noticed that, we're coming into this region. I'm looking for a black swan event around 2018 to 2020. We ended up getting it. I'm looking for a 2 to 4 year, period where we're going to have high uncertainty, interest rates get ushered in, high interest rates, high inflation. Everybody expects a recession for the year of 2024, right? So now we're at the end of 2023, basically. Q4 2023, was, in my opinion, this little last, piece. And now we're on this last jaunt up where we can obviously look around us, and the stock market is just not stopping. The housing market prices aren't necessarily, steadily increasing,
Maybe in
but they're
some
not.
markets there's a cool
Yeah,
down, but like broadly speaking, it is not dropped at all.
no,
Like, I mean, it's
and
it's completely stubborn. Yeah.
and if the
Uh,
interest rates, really start coming down, and it's one of those
it's
things
just
where,
gonna get worse. Yeah.
yeah, and people, and how many people sold their home in 2020 because and not at a high, it was after a collapse came, and
Yeah.
I remember people around. I'm in Florida area, so people in, Sanibel and Naples, and even just regularly, people sold their homes for a profit, a premium, 100K more than they bought it. And they got an apartment, and they've been waiting for the housing market to come down so they can rebuy. Well,
Yeah.
that's 5 years later now, and I'm sure that apartment for 3,000 a month has run them dry on their 100K
Yeah.
extra they made. So now we're at a time where those people are like literally getting timed out, and they're probably going to just buy a home before they miss, before it just keeps going high.
Just
We're in
keeps
that
going
realm
down.
of, yeah, where things are just kind of in that piece. So, in my opinion, we're leading up to, I think, a final area up in this 2026 to 2029 region. If I had to really lean on it, I'd say probably 20, similar to 2007, where 2008 was the real high. I'd say like in this 2006, 2007, but it's an area where personally I'm just very aware, right? This is not a time where I'm going to be buying a brand new home for 3 to 4 times valuation. I'm probably not going to be just now getting into any kind of an asset class. I'm not going to just buy Bitcoin at $110,000 or any of these things for the long haul. Probably, these are, it's for my own mental, preparation, so to speak.
Yeah.
And I see crypto leading up to this way as well. And at the end of this, I see that this is probably where we get that big recession, potentially Great Depression 2.0 is where,
Yeah.
I've looked at it in a sense. And the reason
Kind
I
of
say that is
in.
because now we're talking about 100-year cyclical event from the Great Depression in 2029.
Yeah, I was gonna say it's basically 100 years from the Roaring Twenties collapse into the Great Depression. I wanted to ask you this, like Paul, like just from like a fundamental question. So I understand your target from just like practical, applicable terms, like 2026, 2027, somewhere in that ballpark, maybe up to 2029. We really get an exhausted rally. It's just nonstop. Is the reason why this real estate cycle theory that you're discussing is so important and plays such a big window is not only obviously the long-term window of data that we have to work with, which is what is really interesting to me and how it repeats
Right.
in certain ways, but is the reason why it's so important to these kind of broader liquidity cycles that drives markets, is it because there's just so much liquidity driven through these real estate cycles? And what, just to kind of put into context, what I mean is that if you think about an average everyday person, the majority of people, the biggest thing they're going to make an investment is their home. They're taking out a mortgage. It's one of the few things you can get a 30-year loan from a bank on to go purchase. So is it, and correct me if I'm wrong, if I've got it down wrong, but essentially because of how big the real estate market is, because of how big that credit system is, this is what really drives the broader cycle theory for all assets as a whole. Have I got that right? Or
Yeah, I think so. And honestly, I just, in the sense of just viewing,
no,
just data over history at this point, is just that, we just go through these periods where, just
no,
like we saw this weekend on altcoins, right? You have this huge crash that we see time and time again on every time frame, whether it's over 20-year time scales or not. But it's, yeah, like it's liquidity moves at the end of the day. And most people are coming in at highs and getting wiped out on the way back
no,
down. And then we reset the clocks basically. Right. So, I think that, in the scale of just that like type of outlook where, markets, get these huge impulses and these huge corrections, and realistically, even if we do see this, Great Depression 2.0 type of thing, to me, I think we just go
no,
back to 2016 prices, whether that's 2016 in the stock market, 2016 in crypto too, and housing, right? Like, so for example, in Florida right now, the average home around me
no.
is 500K for minimum for, a box. And there, that was like probably
Just a
120,
couple years ago,
150,
yeah.
just, back 2016 timeframe. Right. So anybody that bought then maybe doesn't feel the pinch and all, but like anybody over the, 10 years go by, that's a long time for people to try to, kind of start bettering themselves. You have to deal with the rent increases along the way. And the other things are people get involved with credit. Our credit is at all time highs. Our personal savings are at all time lows. I mean, we're just at places where, and everybody's just feeling the pinch now. It's too late to make those adjustments, or be prepared. You're living out this piece that, as far as the average day person that's just out there going to work and just trying to provide
Yeah.
for their families. I mean, it's incredibly hard, man, if you weren't somehow prepared in a sense for this type of environment. And it's been going on so long that at the end of it, I feel that at the very end of these peaks, and mind you, I'm 35
No.
years old, I haven't lived out many of these peaks by any means. But what I can imagine is that, just like the people who in 2020 sold their home and been waiting for the market to come back, and with their 100,000 extra, so they can put it as a down payment and whatever, the new home values around us now are substantially higher. It's already been 5 years. If we go another 2 or 3, it's just going to seem like it's never going to come down. And I feel like that's just, and things around us will be inviting, where it's like, 1%
Yeah,
deposit,
there'll be some
down
ridiculous federal
payments on your
policy that
home,
will just
and
be,
we'll
oh, and
all,
the
all
incentive of
these
getting,
things.
yeah,
Yeah. Draws everyone
you
in,
know,
so you can get more debt and more credit. And and then if we get a hit, it's repetitive, man. Like, unfortunately, there's always things that wrapped around it. But I do just think that it's just a vicious cycle that, if you're not
yeah.
prepared
Well,
for, it's going to hurt you in a sense. And I could be wrong, obviously, but that's just, so far this has unfolded so incredibly over in front of my eyes since 2012, especially. And I've just used this in my larger theory here with multiple things, including crypto. Um, so it's just an interesting piece that I think in the stock market as well. Things like Nvidia and things like, when people look around us and say, why are these things, valuations are just so high, and all this and all that, and economy, this or that. Like, take all that out of the equation
yeah.
and just, I mean,
No,
this is about
this
as
is a
simple as
great
it gets.
example of you really have to kind of strip yourself of any kind of fundamental benchmarks of where things should be, or again, trying to think, I think with a buyer's bias that you want things to come down to your price targets. At the end of the day, cycles are going to play out in a very structured way over the long run. And the more you zoom out, you can start to find these long periodic trends where the history just repeats itself. It just looks different. There's going to be different names, different assets. Crypto is definitely a big dynamic change to that. But this is really exciting stuff, Paul. I'm very happy we got to dive into it a little bit and chat about it some today. I appreciate you making the time to run through so many different charts and kind of get to share some perspective from your trading experience. And I think overall, man, it's fascinating. It gives us a good foundation. I think it's going to be really exciting for people to get to learn about your trading strategy, to learn some of the more technical aspects, but also just get to learn how your mind works overall, because it seems like at the end of the day, you still keep it at a big picture view. You never lose sight of that, which is really important.
Absolutely. Yeah, no, this has been a really fun video to make. And yeah, I'm very excited and, interested to provide, different versions on how I come to things. And like I said, I'm happy to make, dedicated videos to some of the processes. So if it breaks it down a little bit more simpler for anybody, or if anybody has any questions, feel free to leave a comment. I'm pretty good about, responding in a pretty, hopefully a clear manner that makes sense. So, but yeah, no, I think exciting times. I think we've had some exciting times, and I think we're continuing to do so. And just
Absolutely,
a
man.
great
Well, I'm
time
happy to
to
have
be
you on here,
in the
Paul.
markets.
Again, as always, guys, with anyone new on the channel, just want to say give Paul a fair chance. I think he's got a lot of interesting stuff to share. We wouldn't have him on here if we didn't believe that. Paul, it's an honor to have you here, man. Thank you for making the time, and look forward to seeing more of the stuff that you put out on DataDash, man. It's going to be exciting. A lot of exciting times ahead.